Will now be recorded.
All right, guys, welcome to the weekly watch list. And today I'm going to go over a couple things that I'm seeing. I'm seeing this a lot, and it's a little scary. It's worrying me just a little bit about the overall market. I really hope that I'm wrong, but I'm going to go over it and see if it makes sense to you guys or not. But so this is SOXX. This is a semiconductor index, and the semis really started off our sell-off. And looking at this long-term chart, this is the monthly chart. And here we have this long-term uptrend. And we broke that uptrend. And we came up and we tested that uptrend, try to get back above it, and we failed. Big reversal candle here, down. And looking at the weekly chart, we could see now, we had this nice uptrend, broke down, came back, rallied hard, and then hit that same uptrend, failed to get it, and sold off hard. You can see the volume increased dramatically. And then here we came and we bounced off this 100-day moving average, and we got rejected at the bear flag rejection point of 147 and closed. So that's not a good sign. Essentially, if we break this 175, we're going to go to this 163 and possibly revisit this support area here at 147, which would be pretty bad considering this is a weekly chart. Going on our daily, we can see that 140 area, even 150. If we go to 150, that's a huge drop. But that's what it's looking like. This pattern is forming so far. Now, I hope I'm wrong, and I hope it reverses and jumps back up and gets above this 190, 147. But if we don't, that is the direction that the charts are telling me. Because this pattern, this broke of long-term uptrend, back test, and confirmed down, this pattern is everywhere right now. And I could show you on ES, we have the same thing. We have the long-term uptrend. We broke down, rallied up, back test, failed, sold off. And right now we're just getting rejected at this breakout point. So we already got rejected here, sold off with good above average volume, got here, got a little reversal, but we haven't got any follow through. So going to a lower time frame, we do have this little hourly bullish channel here forming, but we need to hold this support here, hold this support. If we don't, we're going to break this channel and head essentially to this 2884. And if we break that, we head to that 2872. If we hold this support on the 1 hour on ES, essentially we could turn it around, go up, break out, and start heading past 2900. As of right now, we're just holding that line. But the same pattern is on that monthly and weekly chart where we broke the long-term uptrend, back test it, and confirm down. We could go to NQ as well and it did the same thing. Long-term uptrend, broke it, rallied back up, back tested, failed, down. Okay, and on the hourly on NQ, we have a uptrending channel as well, but on NQ, see, we are broke that 1 hour support and we're below that. That's not good. We're below this channel as well. So that's not a good sign. That's suggesting we're heading towards this 74, 77, 75 area drop there. So this is right now weaker than ES and telling us that this is breaking that uptrending channel now. ES is currently holding it. Let me go to the Qs. So let me go back to the weekly. Let me go back to the Qs. QQQ. So here we could see the same has happened to the Qs. We have this long-term uptrend. We broke it here, came back, back tested, and then sold off here. And then we also got rejected at this weekly bear flag 182.90. So we got rejected there last week. We couldn't close above that. Showed weakness. So essentially, if we fall past 177.69, we're going to have to add to puts. And essentially, it's going to first test this monthly support at 173. If it doesn't hold that, then it's going to test this breakdown. And it's heading to this 163. And essentially, if it breaks that down and it loses that 100-day, we're going to that 155. So strong, and we hit all-time highs and keep going. But as of right now, the pattern is telling me we broke this long-term uptrend, showed this, we try to reclaim that uptrend, failed, sold off, and now we're forming a bearish pattern. So unless we break that rejection and close above that and a bear flag, then we will be good to higher prices. If not, this is it's going to head down if it breaks these levels. Okay, we can look at SPY as well. And here I kind of labeled it a little bit. We have this long-term uptrend is the yellow, and that goes back, all the way from here. All the way here, broke that. So this long-term channel, we broke it here, reversed, try to reclaim it, failed, and rejected. And we're also having some rejection here. So we need to break that and get above this long-term uptrend to reclaim that bullish uptrending channel. If we can't, then this is going to come down to find more buyers, and hopefully it doesn't come down and break these lows. But if this is a megaphone, then it could definitely come back down here and break this low. Do I want that? No, I don't want that. What do I want? Sure, I want all-time highs. If we get above this 300, we'll have a base here at 295, and we know that would be a good support so that we could be long above 295 and let it just keep running and running and running. I would love that. But if we do break down, we got to play that. We got to play that to the downside. I don't like this break of the long-term channel with the back test and confirm. Hopefully a fake out back test and confirm, and we do head up, but that all depends on what's going to happen on the Fed meeting and also the China deal. So is that going to save us? I don't know. Hope it does. If it doesn't, we know where we're going. We're going back down essentially in this megaphone. All right, so a couple of stocks I want to look at. Look at V, which is Visa. So Visa has a nice uptrending channel on the weekly and monthly. If we go to the daily, we still have this nice uptrending channel. And it's right now at a decision point. So if Visa breaks this 166, it's essentially going to this 165.70 to back test this breakout. So it had resistance here, resistance, 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 and it broke through that breakout. But now it's kind of consolidating, which is fine. It could still break up, and if it breaks up this 172.20, then it's going to 176.40. So watch for that. If it breaks out that 172.20, it's going to 176.40. Now, if it loses this 168.89, it's going down to 165.74 to test that. If it loses that 165.74, it's essentially going to this support at 158.53. So keep that in mind. Well, first it's going to make a stop at that 162.48, which is the 50-day moving average. And if it loses that, then it's definitely coming down to the support and seeing if it's going to hold there. So up, we know the direction, and down, we know the direction. That's for Visa. Now, let's check out Apple. So Apple, let's go to the weekly. So Apple, we made a high here, we made a low, and then we made a lower high here, which essentially, if we're making a high, a lower low, and a lower high, and we're making a downtrend, but we need to put in a lower low first into kind of solidify that downtrend. And right now, it's trying to turn up, but it needs to get above this 198.10 in order to turn up, because right now it's in a bearish formation. It just closed this gap here, but it got rejected, but it is holding the 50-day moving average on the weekly. Now, if it holds that, that's good, but if it loses that, that's bad. To be bullish, we definitely need to get above this 198.10 to try and hit that 209 area, because we need to hit this month, we close above 209.88 to remain bullish on Apple. If we don't get that close above 209.88 on this month, we cannot remain bullish on Apple. And why is that? Well, because we have this huge bearish engulfing here, and unless Apple could come back and engulf that, then this is a reversal and it's going to head down. So this needs to come up here, close above that, and it will reverse that, and we could continue higher. But if it doesn't, essentially, if we can't get that closed by the end of the month, then it's still either going to be choppy sideways or we're going to be heading down. So as of right now, Apple is in a bullish pattern on the daily, bearish pattern on the weekly. We got to get above this 209. This 198.10 to remain bullish. And if we lose that 186.17, which is essentially the 100-day moving average, if we lose that, then we're gotta go bearish on Apple to 170. First, it would be this gap fill at 179.50, and then essentially 170 if we lose that 100-day moving average. All right, let's check out. We checked out SOXX, right, which is the semiconductor index, right? We checked that out and we could see that, it got that rejection and it sold off and it's not looking good. So when looking at that, SOXX, that represents NVIDIA. So we see here in NVIDIA, we had a falling wedge, it broke out, but then got rejected. It was really weak. There's a weak breakout. And essentially it looks strong because it was above average volume, but then it was just kind of choppy and weak. And now it's at this kind of turning point here. Above 144.81, we could go bullish to 148, and below, if we maintain and reject this level, then we're going down to 140. So essentially with NVIDIA, if we do go down to 140, we're essentially going to be going to test this 132.60. And if we break that, we could hit that 124.46 and possibly get a double bottom there if the market decides to turn. But if not, NVIDIA could possibly go sub 100, which I know that's crazy to think, as the stock was a $300 stock last year. But it could go to that monthly support of 100, maybe even exceed it a little bit before catching support and reversing. So we shall see. Now, if we do get above that 144.81 and we push above, we could definitely hit that 148 and then essentially that 155.60 if we get some good momentum. Okay, but as we noticed earlier on the SOXX, it doesn't look very strong. Semiconductors are looking weak, and that leads me into going into a well-loved stock of AMD. Now, AMD essentially, although I hate to say it, it essentially had a double top on the monthly chart, pretty much exactly at the high. So this high was 34.14 and this high was 34.30. So basically hit both there and then got rejected. And moreover, looking at the weekly chart, we got a bearish reversal candle put in, and that bearish reversal candle is a dark cloud covering. So we gapped up, opened high, okay, and then sold off and closed halfway from this point of this candle, which completely reverses that. It's telling you that the bulls are tired, they're losing their ground, and the sellers are coming in, the bears are taking over. So we would need some confirmation, break of 29.95. We break that and we get inside there and we close below, and that's going to confirm this reversal. And essentially we'll be going to 27.32 and then 23, essentially hitting this 50-day moving average. So here's the line in the sand, 29.95. If we go below that, it's dropping, definitely gonna drop. If we close below that, it's going to confirm that on the weekly that this is the reversal, and then it's going to confirm that double top, and we're going to be heading down, and we're not going to be making any new highs for AMD. So essentially what this could be as well is a cup and a handle on the weekly, but even if it is a cup and handle, it's still going to pull back to these areas and consolidate, and it's going to be consolidating here. Even if it is a cup and handle, it could consolidate in this range here and be choppy for a little while until it decides that it is going to break out this cup and handle. But as of right now, it's a double top with the bearish reversal on it. So break of this, and we're going here and possibly here. Okay, we could consolidate in this area. If this is a bullish pattern, we will consolidate in this area. We might even shortchange this target and may even hit about 24, 25, and then start consolidating there. Okay. So that's my overview of the markets right now. I'm being very cautious until the Fed meeting Tuesday, until all that noise is pretty much solidified or canceled out. So I would suggest, being very cautious this week, trade very lightly, wait until that decision, and then look for that direction. Okay, it's going to be very volatile during that Tuesday and possibly Wednesday. but most likely Tuesday it's going to be extremely volatile. So you want to wait until the confirmation is done, right? When the markets are going to move, they're going to move and they're going to continue moving. It's not going to be a move that's just going to be, oh, it's 5-minute move and I missed it. It's not going to be like that. So don't act like that, okay? Don't act like you need to be in the move right away when it happens, because you don't. It's going to move, and once it moves, it's going to start moving, and it's going to continue to move, and you're going to be like, when is this going to stop? Okay, that's the move, and it's going to give you time to get in once it starts going. Okay, but don't allow yourself to jump in early and think about a move, and it's not going to be that move, and then you're going to get hurt really fast. Or you jump in immediately and it fakes you out and it goes the other way. Just be patient, wait for the confirmation of the move, and when it is in there, then jump in. If you really want to get in before the move, I would suggest doing straddles or strangles, where you get, on the SPY. Let's see. So on the SPY, you would get, say, 295 calls and 282 puts, right? And you would have that spread. And if it's a big move up, you win. If it's big move down, you win. But it has to have a big move up or down. This is the weekly. Let me go to the daily. So about 294. Was it 289 is the price? So about $2 up and $2 down should be a good strangle. So 287 and 291 would be a good strangle. And going into, depending what the market price is tomorrow, I would really get your strangles probably either tomorrow for a week or two out, or Tuesday the day of, but the volatility may be high and the option prices may be more expensive on that Tuesday. Okay. So there's my little insight. Hopefully I'm wrong about what I'm seeing on the long-term uptrend, which was broken and now back tested and confirmed down. Hopefully this is a bull flag, because it is a bull here, but we do have a bear flag as well. So we do have a bull flag and bear flag mix. So which one's going to break, right? Is the bull flag going to break up, or is the bear flag going to break down? We do have this megaphone pattern that says, hey, we could go down, but we do have this slight inverse head and shoulders that say, hey, we could go up. So depending on what the news is going to bring, that's what is going to push the patterns, because we are in a news-driven market right now. So wait for the news and then get in the move, not vice versa. All right. All right, guys. Hope you guys enjoyed this video. Give it a like if you did. Thanks.